Hey everyone, George here. So if you stuck with me for 2 episodes already with these tax updates, congratulations. You're the top 1% of people who listen to tax content for fun, and you deserve an award. So today we're going to cover the third episode of business tax updates and how it applies to your contractor business. Mainly, we're going to cover investment incentives and some information reporting. So without further ado, let's get started. So on our final episode of business tax updates for the year, the first one is with respect to QSBS. So QSBS is one of the most powerful tax breaks for business owners, and it allows you to exclude 100% of the gain from the sale of your company if certain provisions are met. Now, those provisions are that you have to be a domestic C Corp. At the time of issuance of the shares, you had to have under $75 million in assets. At least 80% of those assets had to be actively used in the trade or business, and you had to have held the stock for at least 5 years. So now what has changed with the 2025 OBBBA tax updates? For one, you used to be able to exclude up to $10 million of gain. However, now with the OBBBA, you can exclude up to $15 million of gain. And always remember, if you plan this correctly between your spouse and yourself, that 15 million gain exclusion can be 30 million gain exclusion potentially. Also, the asset requirement of $50 million of assets has now been bumped up to $75 million of assets. So at the issuance of the shares of the C Corp, as long as your asset size was under 75 million now, you would qualify for QSBS. And the final change with this is prior to the OBBBA, you had to wait 5 years to get the gain exclusion. So it was either you got 0% or 100%. Now they're allowing you to prorate it up to the 100% after 5 years. So there is some sort of benefit if you sell prior to 5 years. Next change up on the list, and this is very relevant to contractors and other real estate investors and professionals, are the opportunity zones. Now, with qualified opportunity zones and qualified opportunity funds, there are certain low income designated areas where if you invest or reinvest your capital, you're able to either defer temporarily your gains or permanently, with the right holding period. Now, this can be really big because if you actually have a very large investment, let's say you had like a rainy day and you had $1 million to invest, instead of paying, say, capital gains on that $1 million, now you could invest this in a qualified opportunity fund, which invests in qualified opportunity zones. And with the right holding period and doing everything right, you could effectively defer the tax on that $1 million and save yourself quite a bit in the hundreds of thousands. Now, specifically with the OBBBA, the first change is that it became permanent. So it's no longer going to sunset. The original provisions had it where this program was going to sunset in 2026. Now, starting in 2027, there's QOZ 2.0. And that is made permanent. The 10% basis boost after 5 years has now become standardized. Zones are going to get redesignated every 10 years now instead of relying on these archaic designations. So successful areas may drop off the list. New struggling areas may be added to the list. Every 10 years is going to change. There's some additional reporting requirements because there was a concern that there was too much looseness in the program, people not reporting certain things. And there's new incentives for rural opportunity zones. So with rural zones, the benefits double. You need to spend half as much only to qualify for the opportunity zone. So this is definitely a big one for contractors, developers, anybody in this real estate arena. And the next and final changes that we're going to talk about today are the 1099 miscellaneous and 1099 NEC reporting requirements. And simply put, the 1099 NEC requirement for $600 or more of having to report a 1099 for any vendors or contractors that you paid, that $600 threshold has now been bumped up to $2,000, which is a nice break because that $600 has been in effect since the 1950s. Everybody knows that the dollar is a lot less valuable since then. So that is definitely a nice break. And also for the 1099K, we're reverting back to the $20,000 requirement or 200 transactions so that PayPal, Stripe, Intuit, all those payment processors now are back to the old threshold, which is a higher threshold to issue you a 1099K. So that's a good relief as well. So these 1099s, the thresholds went up. So that's it. That's all we had for this third episode. And to finally, bring it all home, we had in this one QSBS updates. The exclusion amounts went up a good amount, 50%, and you have now tiered exclusion, so it's prorated over the 5 years of the holding period. You had the qualified opportunity zones. Here, the program became permanent with a 5-year gain deferral, a 10% basis boost. The zones get redesignated every 10 years, stronger transparency and more reporting requirements, and also new incentives for the rural opportunity zones. It's half the threshold. And finally, 1099 miscellaneous and 1099 NECs both have a $2,000 reporting threshold now instead of the $600, starting in 2026. And 1099Ks, we go back to the $20,000 or 200 transaction threshold for these payment processors to issue you a 1099K. So I know there's been a lot to cover and I went over them very fast. I just wanted to give you the opportunity to know what is out there with the new tax legislation that came out during summer of 2025. That's about to that a lot of it has kicked in for 2025 already. A lot of it's going to kick in for 2026, 2027. And I hope you found this helpful. Click like, subscribe, turn on notifications for any updates, and hope to see you in the next one.